right. What's up, guys? Oh, I guess I can. Let me get the chat up. Got to stay hydrated out here in Southern California where it gets pretty hot. Hope everybody's having a good weekend. Should have a really good week ahead of us as far as the markets. What's up, Sam? What's up, Raul? Funny, I like to go live about 5 minutes before we actually start so people can kind of like, you know, not really miss the beginning, have time to kind of get situated and come in, but it always makes for this awkward 5 minutes of dead air for the people that watch this thing later on, right, when it's not live. And it's a pain in the butt, right? I think people like maybe click on the link to watch it and they're like, they see dead air for 5 minutes and they're just like, what is this crap, right? But for whatever reason, YouTube makes it a tedious and long process to trim that opening 5 minutes. It takes hours for that video to process when you try to trim it. It's absolutely silly. I'm not sure how you guys feel about like if I didn't have that 5 minutes of lead time, would it make a difference? Would you guys still be able to tune in right at 5 p.m. market time and be ready to go, or is it good to have that 5 minutes? I don't know. I'm definitely open to suggestions from you guys, and even if you guys are watching this after it's recorded and posted, you can always leave comments in the comment section of the video. Let me know, because I feel it does feel stupid to have that dead air for 5 minutes. And dude, I don't know. Am I coming in choppy to you guys? YouTube's giving me like a yellow error message. It says not receiving enough video to maintain smooth streaming. Is it coming in smooth, or does it feel kind of choppy? I can see it kind of looks blurry in the preview pane. I don't know what's going on. I have not changed any of my settings. Yeah, but it looks blurry, right? Do you guys see it as blurry? Oh, and now it's buffering. What's going on here? All right, it says it reconnected. Hopefully that takes care of it. Dude, when I type in the chat, it comes up as I'm True Trader because I have to be logged into the True Trader YouTube channel to do these live streams. So when you see that, that was me. Sorry, guys. All right, so here we are. We're at 5 p.m. Let's, I guess, get it started. Hopefully I have no more data streaming connection issues. If I do, forgive me. I'll try to get them handled on the fly. I'm not sure how well I can troubleshoot that or not. But this is the Sunday prep. This is June 5th. This is for the week starting tomorrow, June 6th. And yeah, like I think we have a really big week ahead of us. I'm hoping you guys benefited from last week's Sunday prep. There was quite a few things I thought that were really good ideas that played out really well. I've actually got one I can show you guys. You know, we tweeted this video out because there is some wisdom in it that you might not get if you just see it the first time. You literally will probably have to watch this clip 5 to 6 times, and you're gonna have this light bulb moment, this aha moment. And I think it's pretty important. It was the SE idea, Sierra Echo, from last week's Sunday prep. And all right, it's reconnected. Hopefully this works. If it disconnects again, guys, I may just shut down, reboot my my internet here at my house, and then restart the whole thing. But let's see if it works. All right, so here's the SE idea from last week. This one again is another one just like Square, where it's valid already. It triggered on Friday. Now I'm looking to buy scoops. So 77.7 is what I wrote down. And I know you guys are like, well, there's a weekly or an annual pivot at 78.92. Ricky, why don't you want that? Because I want 77.70 because it's a retest of the long trigger. Here was the failed breakdown right here. This area, and it was this pushback higher that reversed it. That's what made it a failed breakdown. So I want a retest of that. It's literally this line right here. I want a retest of this line. So this is the chart now, and you guys can literally see right here is the absolute exact retest of that level. And again, this was, you know, done on Sunday last week, and the trade played out on June 1st. And you know, even if you missed it that day, you could have had it on your watch to rebuy the next day. And, you know, we went from 77.70, well, 77.64 I think was the low or something like that, all the way up to 84, guys. So, you know, these ideas, it's not just, okay, great, here's a way to make money. You could have made money on this trade, but it's the understanding of the concept that I just outlined in there. So rewatch that as many times as it takes, guys, as many times as it takes, because I'm promising you that same setup occurs all the time. You just have to understand what's really happening behind the scenes there. And in fact, I did trade this one. I think I might have been at the golf course or something like that when I got the alert about it hitting that level. So I kind of like waited for it to pull back, bought some, and I just sold into the close. And, you know, I absolutely forgot to have it on my watch the next morning like I was supposed to, is what it is. But these ideas, I mean, they're abundant, right? There's no shortage of them. You just have to understand what it is that creates that setup. All right, guys, so quickly, real fast, if you guys need a broker, Cobra Trading is the only broker you'll ever hear me recommend using. They are hands down best customer service you're ever going to get. If you guys want to try them out, use the link in the description. You're going to get 25% off your commissions, which adds up huge, trust me. And you're going to get a free month of whatever platform you decide to trade off of, whether it's DOS or Sterling, or even Cobra's own platform. Spike Eat, these guys created a platform that allows you to backtest data from historical stock data. We used to do this by hand manually. It's tedious, it's a lot of Excel work, and it takes a lot of time. This allows you to do it quickly, fast, and you can even go and retroactively pull data to verify that you actually have an edge. There's a link in the description for that one too if you guys want to try them out. And Scripts to Trade, guys, honestly, these guys are my favorite group of coders. They make the sickest indicators for Thinkorswim and TradingView. And if they don't already have the indicator or like you know, a tool that they've created in their library that you want, if there's an idea you've got that's not there, they'll work with you and they'll custom code for you guys. And in fact, I've got a script with them that we're just putting the finishing touches on. I absolutely cannot wait to show it to the world. It's going to be epic, so check these guys out. Honestly, hands down, one of the best group of guys to work with. And there are some earnings this week. We are kind of trailing off towards the tail end of the earnings season, but regardless, you got to know that there are still some that are going to produce tradable moves. And again, I'm not going to go over earnings plays, but if you want to see how I prepare for earnings, there is a webinar I did. It's on YouTube on exactly that, how to prepare for earnings, guys. So the topic for today, if you guys saw the title of the video, the last Sunday prep that you'll ever need. What do I mean by that? Well, one of our goals at True Trader, especially at True Trader for all of our members, is to legitimately turn you into somebody that can fish for yourself. We want you to not need us. I mean, you can come into True Trader and watch us trade live every single morning, calling out trades ahead of time, not front running anything, legitimately trading liquid big name stocks. And you know, you could copy trades if you want, but that's not what our goal is. We want you guys to be able to trade on your own. And it's no different when we do the Sunday prep, right? Like, I don't want you guys copying my trades from the Sunday prep. I want you guys to understand, to think like a trader so you can create your own preps, because I'm only giving you the Sunday prep. You're not getting the Monday, the Tuesday, the Wednesday, right? So what do you guys do if Monday comes along, all the ideas kind of either get invalidated or were valid, and come Tuesday, you don't have a game plan, right? That's not the goal here. The goal is to make it so you guys can create your own. And so, got a question on Twitter from Preferred Bird. Hi, Ricky. Recently stumbled upon your content. Love the no-nonsense approach to the market. Would be a huge help if you could go over a bit how you scan for your particular setups, or if you scan at all. Thanks. That last part makes me laugh. If I scan at all, that's exactly what this is, right? This is a look into my scan, how I prepare for the next day. And so it all starts, one, if you're not familiar with the Sunday prep, typically the format is we go over the broader market. Well, we talk about a broader topic, right? Something maybe based on trader psychology or risk management, things like that. And then we transition into the broader market analysis. Then we talk about sector analysis. And then we talk about the trade ideas. And when it comes to the trade ideas, there's 4 topics, right? 2 sets of longs and 2 sets of shorts. It's the longs, it's strong stocks, I'm looking for continuation, or oversold stocks where I'm looking for a reversion to the mean and I'm looking for a bounce play, and vice versa for the shorts, right? I'm looking for weak stocks where I'm looking for continuation, lower, or I'm looking for overbought stocks and I'm looking for a reversion trade back to the mean. Now, where I'm leaning always is going, and the reason why the format of the Sunday prep is as it is because it should show you that you have to start with that macro top-down view of the broader market, then the sectors, and then you get into, let me see if it reconnects. All right, so we're reconnected. Guys, I hope this doesn't ruin the stream, because legitimately I'm excited about this one. I think this is going to be a great stream. So once you look at the broader market, it gives you a general idea of maybe there should be a bias this week. Maybe we've oversold on the broader market and we should be looking at long ideas because we think the market's going to have a bounce. Maybe the market's really frothy and we've been just jamming straight higher, and we should be leaning towards short ideas because the market might need to have a pullback and cool off, right? So you always have to get those concepts from the broader market, and then you have to look at the sectors to understand where money flows in, where's money flowing out, what sectors maybe should be hands off, what sectors should be, oh, here's where ideas should be aimed at. And then we get into the ideas. But the real individual names where I scan for come from mostly from FinViz. I obviously look at charts all week long as I trade. So you'll see like there are stocks that pretty much hit my scanner almost every day. They have the 2 things that as a trader you need, which is liquidity and range. So for a stock to even be on my radar, it's got to trade at least 2 million shares a day. I don't mess around with these illiquid large cap names that, you know, have 70 cent to $1.50 spreads. You know, like, it's not fun to get, you know, put in a position where, you know, you go long and you're wrong, and in order to get out of that trade you got to hit the bid, but the bid's a 70-cent spread and you're losing money legitimately just to get out of the trade. So I need as liquid as possible, and it needs to have range, because without range, how am I going to make any money on a day trade, right? So understanding those concepts, let's get into FinViz. So I've got my FinViz here, and let me move OBS over here so I can look. All right, so I go into my screeners. And I'm not here so you guys can, I'm not showing this to you so that you can copy my screeners. I mean, I have plenty. Here's the funny thing. We literally did this in the room the other day with one of my groups I'm working with. And I was like, look, the market's kind of in a weird spot right now. What do I mean by that? If you guys paid attention to last Sunday prep, let's look at the ES real quick. We're kind of starting to put in what looks like the ability to have a near-term bottom and reversal, and that's what we got, right? And we talked about this last week. There's going to be stocks, individual names that are set up very similar to this, and that actually doesn't fit in to any of those 4 criteria that I just laid out, right? So I wanted to create a new scan to find stocks just like that. And you have to start with this kind of question you ask yourself: how would I describe the perfect stock for this setup? So I'm looking for a stock that is beaten down, has maybe put in some bottoms. Well, let's go up here and we're going to go to all. And I'm literally going to do some things that look, you see there's 8,500 names, 8,500 tickers. I don't want to go through 8,500 tickers. How can we whittle this down? Well, let's look for things over 10 bucks. Let's just start there. Okay. All right. Down to 5,600. Let's talk about, we need range. Remember, I only want to trade things that trade $1.50 range. Okay. Now we're down to 3,600. Average volume, I need at least 2 million shares traded. Wow. We're down to 400 tickers now from 8,500. Do you see how quickly we narrowed it down, right? Okay. So, let's think in terms of what would be something bottoming that is maybe setting up very similar to the way the market was, right? Well, we have these things like the 50-day, the 20-day, the 200-day. I'm going to go ahead and say, let's look for things where, the 20-day is underneath the 50-day. So we're going to say 20 is below the 50, okay? That means we've been in a downtrend, right? When your faster moving averages are below the higher ones, you've been in a downtrend. Now we're down to 323. Let's see here. Let's say we are, let's go 15% or more above the lows, the 52-week lows, okay? Now we got 138 tickers. And what I'm going to do is I'm just literally going to go and look at the charts and see, are there things that have very similar looking setups, right? So, you can really just look at charts and scan and kind of take a quick look and go, oh. And I'm telling you right now, guys, this is probably one of the most underrated, under-talked about topics, and it's super, super important, and that is stock selection. Seriously, guys, stock selection is huge. If you are not trading the right stocks, you're just spinning your tires, right? You really need to focus on making sure that the stocks you pull up are going to benefit your style of trading. They're going to produce setups that are actionable and able to be taken advantage of for trades. And so you can start to see there's certain names like this CPNG. Look, we've flushed out. We kind of been setting this base. So let's go look at CPNG. I have no idea. I did not prepare this for you guys so that I could do these examples. I'm literally doing this freestyle right now in front of you guys. So look, what have we got? We've got the sell-off. We've got the push into the 20-day, and now we've been setting a base. If we look at a weekly chart, I want to see, do we have a higher low? We do. This candle here has broken the low of the previous weekly candle. So we have a setup here where if something happens, we can create an if-then statement. If something happens, then we have a trade possibly, right? How does that work? Well, if we're going to reverse and we are going to try to get back up to the weekly 20, which you can see when this name reverses, that's where it goes to. It goes to the weekly 20. Why? Because things trend on the 20, just the way it is. We have room back to the weekly 20. So if this is going to reverse from here, then it's going to have to start making higher lows and then higher highs. Well, if this pullback here on last week, right? We don't know if this is a higher low yet. In order for this last week's candle to actually be a higher low, no matter how much lower we come, we cannot break this. We cannot break this low. If we break this low, then we don't have a higher low. It's as simple as that, guys. So all I would do is possibly set an alert up here. I can draw the setup for you guys. It's not complicated at all. legitimately, I think everybody needs to know how to look for these setups. And it's super simple, right? So if we put in a higher low and then break above this 14, let's say 1430, above 1430, the author price is telling you it's trying to put in a bottom and reverse, and it's trying to get back to that weekly 20. At that point, you have an actionable trade. Now, I'm not saying this is a setup I would trade. I'm not in love with this risk reward here, right? Because you're not wrong unless you get back below $9. Do I want to take a trade at 14 trying to make 3 points? If I have to risk below 9, the risk reward's upside down, right? So in no way am I trying to say that this is a setup. But like, it's no different than SE was. Well, except for SE, that's a nuanced one that maybe I shouldn't get into that, but coin, right? Here's coin. Coin was an idea from last week. You see the setup, low, higher low, and then we broke through those highs, and now we're just selling back into this range, and we very well may find some support here and then try to get back up to that weekly 20. So that's one example of how I scan for that setup. But I have all these other setups, right? So let's just look at oversold reversion setups. Look, over $15, over $1.15, over $1.50 ATR, over 2 million volume, and here's your RSI. For something to be super oversold, the RSI is going to get down into the 20 range. See how there's nothing in this scan? Guess what? This week on the Sunday prep, there's no ideas for this setup. And like, you know, I can open the parameters up. I can go to 30, and of course you get A and F. But A and F, there's nothing really desirable about this setup for me. I don't want this trade. Maybe last week I would have looked at it, possibly, but you know, this week, nothing. We sold off, we had the bounce. Now what happens from here is kind of anyone's guess, right? There's no edge in this trade. Same with if I wanted to do overbought reversion setups. The parameters are exactly the same, and I'm just gonna go and change the RSI to 90. Nothing, right? 80. One chart, PBF. Guess what? It's in the list this week, okay? Let's see, Strength Hunter, right? I've got one called Strength Hunter. And I actually always come in here and change this to 0 to 10% below the high. So what is this telling me? Look, and actually we can change this to any. I want stocks over $10, $1.50 range, trades over 2 million shares a day. I want it to be within 10% of 52-week highs. Why? Well, for a stock to be strong, isn't trading close to highs in a bear market like a no-brainer? That makes it something that has strength. And you know, a lot of the oil names, energy names, consumer staple names, they're in here, right? Why? Because they have relative strength in a bear market. Is that something you want to know? Yeah. What about this one? Short pops into the 20-day. What is that? Okay, I want the price to be below the 20-day. Everything else is the same, right? Over 15, over $1.50 ATR, over 2 million shares, and I want the price below the 200-day. That just gives me the added benefit of the stock being pretty weak, right? Stocks underneath their 200-day are not typically that strong. Now, this scan earlier in the bear market was much more useful. As we come down to levels like we were just talking about on the ES, where you start to get a possible bottoming formation on the daily. Now, don't get ahead of yourselves, guys. We are going to get into the broader market in a little bit, and you'll see exactly my thoughts on the ES. But, you know, last week when we were doing this, we had this setup. So if we're going to have a big rally, do I want to be shorting stocks that are popping into the underside of their 20-day? Depends. It depends on the name. It depends on, you know, do I think this stock is ready to have a rally with the rest of the market? If the market rallies, how far is this going to rally? How far are we below the 20-day? Things like that. That's the way my brain works in order to find these ideas. And so that's it. Hopefully you guys are beginning to see that this is just you and FinViz giving you all these like different things you can look at and figuring out a creative way to define the setup you're looking for. Because even if you don't trade the setups I like, right? You should have a setup you like. And you should be asking yourself, how do I define that setup? If I had to go in here to FinViz and define that, right? Maybe you want Maybe you want stocks that are heavily shorted because you think a squeeze is coming, right? Here's your float short. You want something that has a huge short float, you can find it. You know, you want something with a certain PE ratio, you can find it, okay? Like, get creative, because I'm telling you, you don't need me, you don't need my scans, you just need to know your setup you trade and how to define it, and you can go find setups all day long in FinViz for free. All right, so that's what we really meant by the title of this week's prep, you know, being about the last Sunday prep you'll ever need, because hopefully you guys can go create your own scans based off knowing what I do to get my names, right? Remember, stock selection is so key. It's so key, guys. All right, let me get a sip of water and we'll do the disclaimer. All right. Guys, neither I, True Trader, or any of its affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about today is a solicitation to buy or sell any stocks. It's simply for entertainment purposes. All right, guys. Here's the yes. Like I said, we're going to do broader market first. All right. You see all the alerts I have, right? Why do I have so many alerts? Well, each one has a purpose. First one I want to know of. Let's see. Actually, we'll start at the top right here. Well, not quite the top, but I have an alert marked monthly bar break up here above May's highs. Why? I want to know if we get above May's highs, because if we do, we begin to see the ability for the next possible lower high on a monthly time frame, right? We had March was a lower high. Then we came lower. Do we put in a lower high in June? I don't know. Maybe we make a narrow month. I don't know. But we need to have these alerts, right? We need to know when the next step of the process begins for developing this trend further. So over 4303, we get the beginning of the possibility of a lower high on the monthly chart. It's also, I wanted to note, if we push up into that area, it's also putting us right into the underside of the weekly 20, okay? The weekly 20 and I believe the daily 50. Let me go into the daily real quick, we'll see. Yeah, the daily 50 is right up in that area too, okay, right? So if we were to rip up into those levels without any sort of reset or pullback first, I'm going to be leaning heavy into the short ideas. Let's look at the weekly chart here. Now, the rally so far has been strong, but what I think the bulls would really benefit from is a break below last week's lows, try to probe lower, see if the bears can push, and the bulls defend, right? If they can do that, if we can break last week's lows and not head lower significantly, we may be seeing the beginning of a higher low on the weekly time frame. If you guys remember, look at the daily chart, okay? That's how this thing reversed on the daily. And one concept you guys must understand is that when a big trend, like we're in a downtrend on the monthly chart, we're in a downtrend on the weekly chart, and we were in a downtrend on the daily chart. And, you know, there were times when you could look at, you know, the 120-minute chart and the 60-minute chart and the 20-minute chart, and we were in downtrends, right? When trends are going to reverse, if the monthly downtrend on the S&P is going to reverse, it has to happen on the lower time frames first, and then you get the domino effect of time frames, right? So at the very lowest time frame, right, you know, we can go to the very lows down here on the week of May 20, that candle, that weekly or this daily candle, May 20th. We can drill down into that to a 1 minute chart, and we can find where that 1 minute time frame reversed at the lows. Okay, and guess what? In order for anything to happen, it's got to start on the lowest time frame first and work its way up. So first thing that would have happened would have been the 1 minute time frame reversed, and it may have still been just a lower high on a 5 minute time frame, but eventually the 5 minute reversed, and then the 15, and then the 30, and then the 60 minute, and the 120 minute, until what happened? Until eventually we finally get a reversal on the daily chart. What do I mean by that? We get a higher low, and then we break this intermediate high, and we start to reverse. But this is the daily chart. It still needs to happen to the next time frame up, and then the next time frame up. So, you know, for this setup that we see here on the daily to happen on the weekly, the next thing that needs to happen is we need to get a higher low on the weekly chart. You can see we did it right here, right? Pull back, push up, higher low, and then we broke. Problem was, it took us right to the target, okay? The target, when you're extended from the weekly 20 and you get a reversal like this on the weekly chart, is the weekly 20. So the bulls need to do this. They need to start putting in some higher lows on the weekly chart and then break, and then we can get our push back up into the weekly 20. That's why I say, if we don't get that, if we just rip higher straight into the underside of the weekly 20, I'm going to be leaning into the short ideas because we haven't had that reset yet. The bulls need, for things to be healthy and to have a nice, smooth trend, we need to try to test lower first. We need to try to go lower in order to go higher. You might have to repeat that a few times for it to sink in. In order to go higher, oftentimes you must try to go lower first and fail to go lower. That's the recipe, right? So I want to know if we break last week's lows, and then I'll be watching to see, do they put in a higher low? And again, that's just to reverse on the weekly time frame. And then once that happens, you still have to do it on a monthly, right? If you go back in all the bear market histories, the thing is, when it happens on a monthly chart, it takes a long time, right? We like to deal in dailies and weeklies because at least the ideas can be played out, especially for day trades, right? But here's how we came out of the .com, okay? Here's your low, intermediate high, higher low, and then the break. And then we reversed, and look, what is that, 6-year bull run? And then here's your great financial crisis, right? Here's the very first higher low. See how long this took to actually give people what they wanted or needed? Took months, right? Here's your lows. 1, 2, 3, 4 months later, you get a higher low. Everything else was just a push up, okay? But once you got that, the break above that previous month's high afterwards was what sent it. And I know people are going, well, we had to wait 4 months for it. But look, 4 months later, and then you begin a 13-year bull market, okay? So you have to understand, zoom out, guys. Zoom out, because when you start looking at these higher time frames, you realize when this bear market finally reverses and we start the next bull market run, we're in no position to feel hurried or rushed, like we got to get in. That's why I get so upset with people just going like, is this the bottom yet? Is this the bottom? Screw it. Who cares? Just read the trend. When it is the bottom, you don't have to be first one in, guys. So let's drill down let's go into the daily, and we'll start looking at the levels I'm going to play for this week. Last week's lows, I'm going to be interested to see if we don't break them, if they just hold. Obviously, that'd be a really big support level. Last week's highs, big resistance level. Below that, I'm looking at this, let's just call it 4,000, maybe a little bit below. A retest of this long trigger that got us going up, okay? And there's some other levels above and below. Let's look at the 120 minutes so we can zoom out a little more. I want to know about the 50-day. I've obviously got an alert set up there. And then I don't have an alert down here. I'll go ahead and throw one. Let's put it here. And this is just I want to be alerted if we're coming close to those recent lows where we reversed from, right? Pretty simple. All right, let's look at the NQ. And I'm probably gonna sound repetitive, right? Like, here was the reversal on the NQ. We talked about this last week as well. Again, I want to know if we try to go lower first, if we can eventually start to build and see if we can get a higher low on the weekly time frame, right? Because again, what I just said about the ES applies 100% to the NASDAQ as well. So again, if we were to just rip straight up higher without having that reset lower first, I'm going to be leaning into the short ideas. If we can reset, there's definitely levels here where I want to be looking for bulls to put up a fight, show some support, and possibly have some long setups waiting to go. And I do, trust me, guys. So this, you guys see this level here, retest. You guys can see what it says on the screen, right? Retest of the daily long trigger. If you guys go back to the SE idea that I showed you at the beginning of the stream, same thing. It's a retest of that really important long trigger. Just the SE one was an intraday level. This is a daily chart, okay? But it's the same concept, all right? Retest of that level is a huge level for me. I want to be knowing, because if it gets down there, I'm going to be looking for long ideas, especially if we flush down there emotionally, because that's the recipe right there to get that higher low put in on the weekly chart. Obviously, last week's lows I'm interested in. I also have a mark to say we broke last week's lows. I also have last week's highs marked and the weekly bar break up. And then up by the 50-day, up by those recent, you can see how this this level up here at, let's just call it 13,550, held quite a few times. So I definitely have that marked, which puts us right by the monthly pivot as well as the weekly 20. The weekly 20 is this yellow line, guys, on my chart. It's superimposed on a daily chart, so I don't have to switch to a weekly to see it. Yeah, and then obviously we have this trend line that's been developing up here. Again, guys, if you don't know by now, trend lines to me are not written in stone. I literally just need to see them for a visual guide. It's not like I care if we go through it a little bit or if we don't quite get there, but I just want to have a visual guide. All right, Bitcoin. Guys, this one, I want to just point out on the weekly chart how ugly that candle is starting to get. You know, they made a very good defense of that level last week, okay? I mean, we even talked about this. I said this here looks a lot like this here, which failed to break down and then ripped. And so over here, they started to try that, right? Right here, you failed to break down and then rip, but then they sat it right back down. And so, you know, if it holds here, it can still push. But at this point now, after they did that, after they stuffed that push, if it loses 28,000 now, I really, really would have my concerns about trying to catch that falling knife, because there's just a huge air pocket below it. So yeah, bulls really, really need to defend 28K now. That's it on that one. Let's head over to bar chart. We're gonna do our sector analysis. I'm gonna try to keep this quicker. I know I'm running really long on this one because I spent so much time on the intro. Stock market sectors. I always go in here and I go, oh, let me get out of this. Am I not logged in? I think I'm logged in. Stock market sectors. Wait, I'm already there. Sorry. Right here, we're gonna go short-term matrix. And you know, this is, we talk about this every week. It's, you know, you can't just use it at face value. You have to we have to look and see, okay, are there any things that stick out like sore thumbs? Yeah, consumer discretionary pretty damn strong. I think that stands out, especially because, you know, you're not going to see consumer discretionary be too strong if a recession's really happening. But we got to peel back the onion and look at the ETF itself and say, like, oh, did it just have a bear market rally, or is it starting to look strong? Energy still strong, not surprising. Healthcare kind of had a weak, lackluster week last week. So let's go ahead and drill into them. I made notes on all of them so we can go over them as quickly as possible. Get into my sector ETS, XRT. All right. So a lot of these things obviously are going to have the same things evolving or developing that we just talked about the broader market, right? So you can see I have this level marked here on XRT below last week's lows. That below last week's lows is a continuation short trigger, right? That if this is going to hold the 20 SMA downtrend and continue lower, then we're at the 20 SMA and we're getting a lower high followed by a lower low. That should roll us over. But keep in mind, if we trigger there, if we trigger there and we cannot go lower, then the break back over last week's highs is a huge long trigger. Think about what it'll look like on the weekly chart, guys. So let me just try to draw it for you real quick. If we break last week's lows like this, but cannot get below here, well, then what do we have? We have the possibility of a higher low followed by the break of that level, which can take us back up to the weekly 20. So these are the kinds of setups, guys. You have to realize what is happening on the daily chart is what's creating what will happen on the weekly chart. And you guys have to understand how those time frames do this dance. If you guys don't understand this concept, join True Trader. I talk about it I probably talk about it too much, but it's, in my opinion, the single most important concept to understand about the fundamental ways stocks move. is to understand the way the time frames do a dance. And if what I just was talking about makes you feel like confused, you guys got to head over there and figure it out, because without understanding that concept, you really are kind of trading blind, guys. You must understand the fundamental way stocks trend. All right, so that's kind of the idea. You know, even if we break last week's lows, I'm not super bearish on retail at the moment. I still think it could just be putting in a higher low, and then we go and break above. So, you know, I may be looking to scoop some names in this sector next week. We'll see if they set up. But I have the alerts set for it. XLF, again, now this one already had on the daily chart, you can see push up. That's why I have this line here drawn out. We made the higher low, then we reversed. We still on the weekly chart haven't got that higher low, right? So we need to try to head lower. So what's the level I want to see tested? I want to see this, you know, 2 weeks ago's highs tested. Well, actually that's 3 weeks ago now, okay? But it's that long trigger. Again, I want that long trigger retested. So if we flush, roll over back towards the 20-day on the financial sector, there may be some names in the financial sector that are good for scoops for bounces. Because if it comes down here and holds, and then we can get back above these levels, we could have a higher time frame reversal setting up on the financial sector. Real estate, don't really trade it much, but like to follow it. Nice little retest of that level, right? Got a little bit of a reversal there, came back, tested, bounced pretty convincingly. Now remember, biotech, we said had a pretty weak week, right? But got to peel back the layers and see what's really happening. I put down over 134.05, which is up here where I drew this line. Could really ignite this sector. Why? Let's look at the weekly chart. Look, we've had this set up twice already. Right here, and it went to the target. The target's the highs. Right here, went to the target. Target's the highs. We have the same setup. So over that level, I want to know about it. The thing I'm going to say right now that's important is, now that we've already had it play out twice and we really weren't able to get any sort of serious continuation higher, I'm going to think that there's a chance the next one of these that triggers ends up making a lower high on the monthly chart, which is going to kind of do one of these numbers for us. Let's see, is my brush working? Let's see. So if this pushes here but can't get back to highs, this may end up being a lower high on the monthly chart, and then we could roll over. And if we come down and lose these levels here, this could finally join us at our bear market party, right? Like, healthcare has been one of those names that's been holding up really well, hasn't broke down, has been really holding key levels very well. But the more times I see this setup like this, the more times I think eventually we're going to get that fail. Kind of looks like XLF, right? Like XLF was doing it, you know, trigger, go high, new highs, lower high, and then we finally rolled over, right? I can see that happening on XLV, okay? So let's see if I can, oh man, it's going to make me go click on these and delete them. And if I don't do it right now, I'll forget to later, so forgive me guys, I got to do this real quick, all right? All right, I got rid of them. All right. Materials, I don't really trade much, but still holding that level really well. Looks a lot like healthcare, right? Industrials, retesting the underside of that weekly 20 here. I feel like, you know, the ones that have broke down like this, when they come up here and retest, most likely going to have some resistance and possibly roll back over lower. Look at what communications did. Very similar, right? Finally broke down, and then when they had that retest, that's where it really rolled over. So, you know, when I see charts like this that are finally retesting that level, that's what I think is going to happen. We'll see. Utilities still looks really good, still intact. And when I don't typically trade the utilities that much, but you know, right here we had inside week, then up. Now we have an inside week again. I think if we can break last week's lows and come back down towards this 20, the weekly 20. This is a good level to look to scoop some of these names. Like, there's some names in here that, even though I don't trade them very often, there's a few that are liquid and have range, right? Duke's one of them. I think AEP. There's a few, right? So definitely don't be hesitant to check out the sector. Look at the individual names. If you guys don't know how to find what names are in what sector, you can just come here. Look, click on utilities. Let it load. You come down here, sort by volume, so we only see the liquid ones, and there you go. You got yourself a list of names. Okay. Hopefully you guys understand how to use your tools. XLP. Now, interesting thing about this one. This was the one that had the big breakdown when Target and Walmart got smoked off their earnings. We talked about this last week. You know, what I was interested in is, do we reclaim this longer term uptrend here and then go right back into being bullish again? And, you know, consumer staples in a bear market or a late stage market cycle typically perform pretty well. And so this may have just been that one-off flush, and then we're right back to holding the trend. You know, they reclaimed and then they tried to flush lower again, and that's a pretty convincing bounce, right? And then when you look at the weekly, it still looks pretty good. I'm gonna write this off as just, you know, that was the one-off, and I think this trend can continue back up now. Again, what would change my mind? Pretty simple. Any kind of push up here like this that stuffs and then we roll back over, I will definitely revise my outlook on it, okay? Consumer discretionary, again, this is the one had a really strong week last week, right? As far as what bar chart was showing. Let's go back. Get there. Here we go. Yeah, 3.5% weak for the sector. Let me get back to my charts. Again, I still think this is just a bear market rally on this one. So, like, honestly, names in this sector, any kind of, if they can push any further, like this 165 area, I'm really leaning short into this sector, individual names. Communications, same thing. Any kind of spike up into this weekly 20, I'm leaning short. There may be there may be an opportunity we come back down this 58, 57 range for individual names to maybe look for a base building and a possible long. But communications has just been really weak ever since the bear market kind of started. We talked about it at large, the way that these guys really went and started the bear market months ahead of every other sector. XBI, I think we're starting to see signs of a reversal here, guys, and it makes sense too. Like, right, this is a very key area down here in these lows, right? You can see held. Now we're here again, and we're showing signs of a reversal. Again, this level here that I just drew means nothing if you don't see this with it, right? You have to see the price action confirm. So that's why I have this trigger marked, right? Over 71.57 on this sector, and we may be trying to push up to the weekly 20. So biotechs may be reversing here and have some upside to them. Tech, again, tech, I think we break last week's lows. We could retest that long trigger, 134 area. That's where I'd be looking for names, individual names in the tech sector that might look good for long setups. If we keep ripping higher without that pullback, again, I'm going to be bearish. Oil and energy, guys, let's see. Let's do energy first. You guys can see it. This is the daily chart here. Let me just put it on this one. Under 87.33 is a short trigger that could get us back to the daily 20. I hope I said that right. 87.33. I didn't mean, if I said 83.33, I didn't mean it. 87.33 is the short trigger to get us back to the 20-day. I actually hope we don't. I actually hope this squeezes out and we go higher first. Obviously, these pink lines are just from further back periods where, like, this was a major short trigger, right? So the same concept of retesting the long trigger from above being a good spot to scoop stocks, the retest of a major short trigger that has never been retested since. Look at this. This happened back in 2014 and has never been retested since. That first test of that level for me is a huge short area where I'm going to be looking to fade. And that doesn't mean risk management goes out the window. It just means that I think the probabilities are starting to get really, really in our favor. If it gets through there, I have no problem being wrong, taking some losses, and trying again at that next level, because there was that other short trigger from earlier in that same year that was retested but showed that it held, and that was where it really broke down from, right? So honestly, energy has a short trigger. I don't want it to trigger. I want it to go higher first. I think some of these energy and oil names can squeeze, and we might see a serious A plus environment for some shorts. It doesn't mean I think that the bull market in energy and oil is ending. Not at all. But as a day trader, I think there may be some very, very amazing setups coming. So I just got to be ready for these opportunities. Oil, same concept here, guys. I'm just like, please get oil to 180 without a major pullback. If oil comes to, if XOP goes to 180 with no major pullbacks, like that is going to produce some exceptional A+ fades. And again, it doesn't mean risk management goes out the window. It just means I'm preparing for huge trades. I can still be wrong. I can still take my losses, but I can live with it, right? When it's that A+, I take my shot. I put much more risk on than I would for just your typical Sunday prep A+ setup in the Sunday prep list, right? Like there's A+ and there's like A++, all right? So that's it. That's the sector analysis. Let's get into the actual ideas because I know this is going long and I apologize, guys. First name on the list. So these are long ideas, okay? Strong stocks looking for continuation. First name on my list is CF. Zoom in a little bit. This thing, so these guys follow, you know, when oil goes up, this typically has been going up as well. It's a petrochemical company, so you know that's the link there. I'm looking for a flush down into last week's low / quarterly pivot area. You know, this 92 to 92.50 area. I think it's probably a decent op for a bounce play. Now, I wanted to point out if it loses 90, I think it's 90, right? These lows here, under 90, and the chart would be broke to me, and I probably would even entertain the idea of flipping short bias on it and shorting pops and joining the trend down. But as long as it's above 90, a flush down into, you know, some of these recent lows, I'll probably look to bounce this name. Or if it breaks above Thursday's highs, I have Thursday's highs marked there. Let's see, what is it? 98.84. So let's just say over 99, and I would possibly look to join trend by buying dips with defined risk. So that's the CF idea. KO, Coca-Cola, is the next one. Definitely a consumer staple product, right? This is a, you know, think about it in terms of like why certain names are on my list, guys. Like sector related, money rotation, trading near 52-week highs. Keep that in your mind when you're like going through these ideas and realizing like, oh, I could create that idea on my own. I don't need Ricky. All right, the idea on KO, either a flush down to last week's lows, which may be a little bit too close, right? We closed at 63. Last week's lows are like 62, so it's only a point away. It's got a $1.44 ATR. So I don't mind getting stopped out, being wrong. Next spot I would entertain is going to be actually no. I have two things. I'll try it against last week's lows. The other idea is probably something that's not going to happen early in the week, if it happens this week at all. But you can see I have these highs marked up here over 65, over 65.10, and I look to join trend. Why? Let's look at the weekly chart, guys. Holding the weekly 20, had a nice inside week. In fact, you know what? I didn't do this, but I'm going to do this. Watch this. So this is to let me know that we're breaking last week's highs, because, you know, sometimes instead of getting the chart, sometimes the charts don't set up just quite perfectly, right? Like maybe we don't break last week's lows and get the higher low, but we got back-to-back inside weeks. If we break over last week's highs, which is 64.32, I will look to get involved in this idea and be long Coca-Cola, joining trend on dips, okay? Hopefully you guys saw where that came from, right? Back-to-back inside weeks. What's that show? Contracting, consolidation. All right, PFE is the next one. I would love a flush down to last week's lows. Look at all the different levels in here, the confluence. You have the weekly 20, the daily 20, the 50-day, and the annual pivot, 5160 to 5190-ish. Anywhere in there, I'm looking for a flush. I've got the alert set at 5170. But yeah, I think this one's good for a bounce if we flush down there. I'm going to try to keep it moving pretty quick here, guys. PM, Philip Morris, that's the next one. I'm going to watch for the monthly pivot / 20-day area. Scoop off that. 271 is the ATR, so that, again, may be too close. If listen, I'm not going to have a live order sitting right there at the monthly. I'm going to watch price come down to that level, and I'm going to see if buyers show up, if they try to hold. If they don't, I'll just sit out and wait, because I think the next level is going to be down here around 102, which is going to put us much closer into line with the ATR, right? So if 104 doesn't work, I'm going to be falling down, see if we get support at 102. You can see this trend line here. You got your weekly 20 down there. Not weekly. Yeah, that is the weekly 20, and your daily 50. So it might not even happen on Monday, maybe Tuesday or Wednesday, and by then, you know, you're going to have that 50-day curling up. Might line up pretty good with that 102 level. So that's it. That's it for strong stocks looking for continuation. Again, remember when we were doing the beginning of the prep, I showed you the oversold reversion setups. There's nothing in the scan, right? So nothing for that section this week. But we're going to do what we call just special situations, which means, just like last week, names that are setting up to go hand in hand with what we're seeing in the market, right? Like some sort of bottoming or some reason that I want this on my watch because I think, you know, it doesn't quite fit the mold of strong stock looking for continuation, but definitely things on my radar where I want to be watching for longs, okay? So the first one is GE. GE has been, you know, really, really beaten down, really, really crushed, and it's finally starting to show some reversals down here. It's already valid for me, right? So here's your setup. I even have it already marked out for you. It's already triggered to the upside. It has a lot of room to run up into the weekly 20. Obviously, you have the weekly 200 there. You know, this is one of those ones where if I get involved, there'll be spots where I'm locking profits in along the way. But it's already triggered, so I'm looking to get long anywhere in the levels where I think we have good shots at support. Look at Friday's lows. Friday held right off the 20-day. I think if we can get one more flush down off the open tomorrow, right off that 20-day, I'll probably be there to scoop. I want to see a reversal here on GE. The next one is DSX. And shippers are another sector that have been really strong. This stock, this alert was set a long time ago. It just hasn't been able to get down to me, right? Like, as soon as we broke back above these levels, I set this alert. And every time it dips, it just can't quite get down there. I want 550s. And if you guys don't understand where this idea comes from, look at the monthly chart. This is a beast of a monthly chart for a reversal pattern. Now, again, I know my friend Jay Mintzmeyer, who's like the guru of the shipping sector, would probably be like cringing right now if he sees me talking about this company, because like I don't know the fundamentals about it. I don't know how high it can go, but it's obviously had times in its history where it was priced higher. And you know, as long as the price is telling me that we're going in the right direction, I want to be buying dips, right? So 550 is what I want. I may start 570s. I'll just throw an alert here just in case, but I do want to get involved in this. And this one is not the type, so it's not this one's more of a swing idea, guys, because it's only got a 43 cent ATR. You know, if I'm scooping this at 570, adding some at 550, you know, I'll probably be like watching for it to hold 5. If it can't hold 5, maybe I kick it and revisit later. But the idea, when you come up with an idea based off a monthly chart, it really, really shouldn't be a day trade, guys. All right, so yes, I'm looking to swing this name as long as the shipping sector can stay strong. Next idea is net. Let's see here, over 60, and I want to be getting long on dips, and that's what this alert is, right? So why over 60? Well, let's look at what happened. Okay, we've just kind of went over this concept a few times already. Let me get rid of the pivots so you guys don't get too much on your charts. We made lows, right? Here's your 52-week lows, and we've been setting this base. Now we've pushed up into the daily 20. We got a lower high followed by a lower low. This was the short trigger to hold the daily 20 trend lower. So if it can't, and then it gets back above this 60 level, that's showing me that it wants to reverse. And so you'll see it on the weekly chart. Well, actually, you don't see it on the weekly chart because we still need to break last week's lows to get the A plus look. But if you understand the concept of the failed short trigger, that's where that not needing the higher low on the weekly chart comes in. Exactly the same thing on SE, guys. Like SE, I told you, was a nuanced thing, right? Here was your short trigger and it failed to go lower, but it never gave the higher low on the weekly chart, right? Why? Why did it not? Because of this stupid candle right here. This was the Monday. So this was technically the beginning of that weekly candle. But all I need to know is that it pushed into the 20-day. It tried to hold the 20-day trend lower, and it failed to do so. And that's why we wanted to get long on SE. So it's exactly the same here on net, okay? So if we get over 60, I definitely want to be looking to join trend. And there might even be the same concept here of, like, where was the failed breakdown followed by the next long trigger? Probably right here. So, yeah, maybe if we flush back down into this level, might be worth some scoops as well. So that would be about a 2-point flush from the close on Friday. Net can be a bit thinner at times. Typically off the open, it trades pretty liquid. The spreads will be a little bit tighter. Again, I think if we do trigger above 60, you're going to see some actual volume come back into the name and possibly get a few days of follow through on it as well. But yeah, you could try bounce plays off the lows, but I'd rather it break 60 and let me join trend. Okay. Next idea is Roku. Over 98.24, and I'm looking to buy dips, join trend. Technically, you know, the real trigger is up here over 101.55, but I have no problem at all getting involved if we break over Thursday's highs. Okay. And it's a hated name, trust me. Like, I think when this thing does reverse, this thing can make some big moves up. And it's, you know, it's liquid enough. It's got the range. Like, you can have a hell of a P&L on Roku, guys. Square. This one we had, I think, last week and maybe even the week before, right? Like, it's valid. We've already put in the higher low. We break in. I think we're just basically getting better prices here. And so I'm looking to either scoop this off 79. If it doesn't work there, I'll try it again off these lows. Or if we can break back above last week's highs, I will still be looking to buy dips and join trend. That's Square. And the last one is Roblox. Roblox over 36 really can ignite, guys. I honestly, let's look at it on this. Again, room up to the weekly 20s at 44. Okay. Hopefully I don't have to keep drawing this stupid diagram for you guys, but do it a few more times just so you guys can see and be like, oh yeah, I'm starting to see this stupid setup. Over 36, guys. Should send her. Okay. So again, nothing to do yet, right? I don't have any reason to be long Roblox yet, but over 36, and that should send her. All right, short setups. I'm looking for weak stocks for continuation. BBY, Best Buy. Obviously, this one had a major breakdown recently, right? So any kind of retest back up into these levels, I really want to get short. What have I written down here? So I'm either looking to short a rip into 83.50. It's probably a pivot. Yeah, annual pivot. You got monthly and annual, and you have those recent highs. So anywhere into the 83.50 level, if it gets through, no problem stopping out, and I will 100% be revisiting around 85. We still haven't got any significant push-up since that last sell-off. If we lose Thursday's lows, which is right here, 79.20, let's call it 79.20. I don't know why I wrote 73.20. I must have been a typo in my notes, but yeah, it's under 79.20. I'll look to short pops and join trend to the downside, right? Because it basically push into the 20-day, lower high, lower low, should roll over. Pinterest, pins, 22. I'm looking for a fade off of 22. Got this gap fill right up into the 50-day. Has not had a retest since it broke down. And I think if we can get over 20 and a half, I think it goes, right? So you got the flush out, higher low, break over 20 and a half. We should get a shove up into that 22 level. I'm looking at fade pins. So that's it for weak stocks looking for continuation. The last section is overbought reversion setups. And if you remember, there was only one name on the list when we did the the pre-market, or not the pre-market, the scan, the FinViz screener. Sorry, lost a word right there. And the name was PBF, right? And what is PBF, guys? Whoops, if I could type. I can't talk or type, okay? What's PBF? Oil, energy, minerals, okay? Look at this. It's not there yet. I want this to blow off. I think this can be a huge short setup, okay? Huge. But instead of just having one name on this list, what I have done is I create a list of all the oil and energy names that I will be stalking for the next few weeks for a blow off, right? So we'll go through them. AR, higher to better. Every single one of these names is going to be higher to better, okay? AR, PBF we just talked about. XOM, higher to better. You can see I've got levels like previous resistance levels marked, ready to go. MPC, higher to better. Look at this, starting to pull away from the 20-day. COP, higher to better. APA, higher to better. This one obviously is running into resistance already, and I think we talked about this at a previous prep, right? Like this is a pretty key level. It's 100% expected for it to have this reaction up here. So again, just like I showed you with XLE having that short trigger, this one has one too. If this gets under 46.50, it could go back down to the 20-day. I don't want that. I want higher, okay? Higher to better, because the higher it goes, if we get that blow off, you know, there's probably people already trying to short oil and energy, guys. You have to look at these charts and think people are just like shorting, adding, they're just kind of getting grinded out. If they can get to a level where they all kind of like hit max pain, scream uncle, tap out at the same time, and we get that blow off, it doesn't get more A plus than that, guys. Think like mRNA back early 2020, or I guess it was mid to early 2021 maybe? When did mRNA have that? Mid 21. Remember this? That's as A plus as it gets. I want that with oil and energy. So VLO, higher to better. PSX, higher to better. EOG, last one, guys, higher to better. Okay, so that's it. Those are the ideas. I know that this one probably went longer than typical. I apologize, but I did want to really show you guys how to create your own plans, your own ideas, right? So let me look at the questions, see what we got going. KH is up in here asking about NEO again. NEO was strong this week, and Baba. How about Amazon splitting tomorrow? Been going up for the past few days. So here's the thing about Amazon splitting, guys. Typically, when companies announce, like highly desirable companies announce forward splits, like Tesla, Microsoft, Apple, when they did it, it was a huge bullish opportunity to rush in, buy it as soon as you hear the announcement, hold for a little while, and then sell after it happens. You have to understand the difference between the market we're in now and the market we were in then. When they did it, when Microsoft and Apple and Tesla did it, we were in a bull market. The market was still in an uptrend. Amazon's doing it, and guess what? We're in a bear market. So I can't really say that I have the same hopes and thinking the same outcome's going to happen for Amazon and their split. It could, but I just think that we have to take all the facts into account and understand that the broader market is not the same as it was when Microsoft, Tesla, and Apple did it, right? So keep that in mind. Sorry, guys. Next question. Ray God, Twitter short. Guys, honestly, okay. One, if you want to ask a question about an idea, be more specific. Like, give me levels you're looking at or something. Like, and two, when it comes to Twitter, I think there's too much headline risk both ways. You have, if you're long, you could get bagged by a negative headline about, I don't know, like the FCC or somebody interfering with the Twitter buyout with Elon, right? If you're short, you could get blasted from a headline saying like, oh, the deal's being done and it is going to close at $44 a share or something, right? Like, too much headline risk. Too many names out there to trade other than this. also, we're in like no man's land right here. Like I don't see any spot where I have an edge, right? If it flushes down to like 36, maybe a long. If it were to spike up maybe into maybe 45, maybe a fade, but the headline risk keeps me out. No reason for me to get caught with my pants down. AMD and Tesla. Again, Chu Jiang is asking about AMD and Tesla. Again, it helps me, guys, if you tell me what it is that you're asking, like instead of just saying a level or saying a stock, right? So AMD obviously approaching this downtrend again. I think if we go higher without coming down first, there are short setups. Again, AMD would be in my Sunday prep if I thought there was an edge. If there was somewhere where I had an edge to trade it. I don't see an edge, right? Like, doesn't mean... So here's the thing. And this is actually a really important concept. And I think it's a good thing we touch on this, okay? In trading, anything can happen. That means you could have any idea whatsoever, whatever you want. And you could make money on it because the stock can do whatever. It could be a coin flip, right? But if it's your idea and then you make money on it, we automatically assume that it was our idea that made us money, and we don't actually realize or recognize that maybe it was just the fact that the coin flip landed on heads and we chose heads, right? There's a huge difference. There's a gigantic difference between getting lucky and making money because the coin flip landed in your favor. And it's even worse when it happens that way because you don't realize it. You don't realize that, oh, it was a coin flip. You go, oh, it was my brilliance, right? My genius. As opposed to waiting for setups where you have a probabilistic edge in the market and then putting a trade on. So get this. I might have a setup that I trade that wins 90% of the time. If I put that trade on and it loses money, do I go, oh, I'm such an idiot and like, oh, I should not trade this stupid setup anymore? No. It was only guaranteed 90% of the time to win. Guess what? That still leaves 1 out of every 10 that's going to be wrong. So you take your shots when the odds are in your favor, when the risk reward is in your favor. You cannot just trade these things that are kind of in no man's land and then get lucky from coin flips, or even, it does kind of suck to make money because of a coin flip, because then, right, your ego gets bigger, you might push more size, there's a lot of things that can happen. But you can also lose money from these stupid coin flips and get paper cut to death, and they're unnecessary losses. So it's extremely important to understand, guys, to only trade when there's a setup and an edge, right? There's no setup or edge here for me. As a day trade, maybe, right? Like this will probably hit my scanners a few times this week because why? Because it has range and it has liquidity. So like if it makes an emotional flush, like down from 106.30 to like 100, guess what? Ricky's going to probably scoop that for a bounce play, but it's not something that goes on my Sunday prep, right? And I'll probably look to make 2-3 points on the bounce and be risking maybe a point, right? I'm looking for that asymmetric risk reward on something that gave an emotional flush into a level. But that's not the same as like creating a game plan for the week going forward where, we could look at literally any stock. You guys could say any stock and we could go, oh, buy it here, sell it there. Nah, I want stocks that like have edge. So AMD is like kind of in no man's land. If it rips higher, there might be a fade. If it flushes lower, there might be a bounce, but nothing to really look at, right? And Tesla, same thing. Tesla was on the prep last week and it was almost perfect, right? We were talking about this level and look what happened. It gave a huge sell-off because there was an edge there, right? Not because I just decided to put Tesla on the watch list that week. And in fact, the week before, KH was giving me shit because Tesla wasn't on my list. He said, everybody's making money trading Tesla. You know what? Go watch their Sunday prep. My Sunday prep is about edge, looking for edge. Okay, says check out Boyle. Yeah, I'm sure it's back up at highs, right? Yeah. No edge though. Remember when we put Boyle on the watch, it was here. Actually, it might have even been here, and then on Monday we got the gap up. Was this a Friday and then a Monday? Yep. So this was a Friday, and we talked about it on the Sunday, and then we got the gap up, and this was a huge huge fade, right? Because there was edge, because we're going parabolic, right? And then it did it again, and then it kind of almost did it again, but now it's just there's no edge here at all. Like, it's pulled back to the 20-day, but look, we're trading up near kind of absurd levels on natty gas, right? So, and on top of that, look at these. This is not an easy thing to trade, right? This is this is an ETF, guys, and it's a dangerous one, right? Like, it's very spready. The volume's not very good. It has a lot of range, but it's super dangerous. Boil is a very dangerous thing to trade, guys. Be very cognizant of that. Thoughts on apps short pop into 25, or so I think there's two different ideas here. Ricky, thoughts on apps short pop into 25? So apps is one of those ones I don't trade. Was it apps or app? There's one of these I don't trade, and there's one I do. Let me look and find out. I'll tell you by the 1 minute chart. Gotta hide something. Forgot I had that turned on. So, okay, APP is the one I don't trade, and you can tell why, right? You see all these candles, how they're gappy. Apps, I don't like it that much either, though. When it's like the first 30 minutes of the morning and you see like these gappy candles on a $20 stock, yeah, it's one of, I've traded it before. It's not my favorite. A pop into 25, I see what you're looking at, the 20-day, and it's like a gap fill. Could work. Definitely, I appreciate the format of the question, right, where you gave me a level and then a bias. Yeah, it could work. And again, what's it? It reminds me of pins. Same setup, right? Gap fill into the 50-day and a monthly pivot up there, or like last month's pivot, right? So apps is kind of very similar setup. Gap fill up into the 20-day and previous monthly pivot. Could work. Very well could. And then he's asking, what about J short on a 1950 break? This is one I don't ever trade. Look at the liquidity, right? It doesn't even trade 1 million shares a day, guys. So this is a no-no for me. Now, it doesn't mean, well, actually, I don't know if this is what you're talking about. Because it's not priced at 1950. You must be talking about something else, right? Is J listed on multiples? Yeah, I'm not sure what you're talking about, because J is not priced at 1950. Oh, join trend on a 1950 break. All right, my bad. So same stock, apps. No, when we're up in these prices, like up here, yes, way down here, I'm not trying to join trend when we break 52-week lows. Nah, sorry. Just I feel like it's beaten down. Yes, it can go lower, but I'd rather short the strength on pops back into levels where we have some defined risk. Doesn't mean it can't work. Again, anything can work, and don't let me telling you I wouldn't take that trade discourage you from it if it's your setup. But for me personally, like, I just can't take a short on a 52-week low break on something that was, it's moved down from $100 to $20, right? KH, Facebook long at 192. It's already below 192, dude. Maybe he means 182, because 182 is the annual pivot, and like I could see that. But again, I would probably drill down into the intraday time frames and see, like, let's see where so here's your failed breakdown. Look at right here. Here's your failed breakdown, and then it blasted through here. Yeah, you know what? Like, that's actually not a bad level. Just down here where we got this big rip higher off the earnings, right? Very NVIDIA-like, this chart. So maybe not quite 182, maybe a bit below it, but a retest down into those levels. And, we already kind of saw it, right? So it already retested down there, and then we got this reversal. So, I would have been much more inclined to take that trade here on the first test. Why? Because it's the first time coming back down to where you had a bunch of people miss the trade and, getting that level. Now when we retest it, definitely don't have the same kind of confidence in it, if that makes sense. Pamela, can you show quick, simple with less indicators chart when you have that edge? Not sure what you mean. Quick, simple, with less indicators chart when you have that edge. I mean, like, for me personally, like, well, first let's take this piece by piece, right? Everybody is not going to have the same edge, right? So for me personally, I know my edge. I'm looking for stocks that, you know, are either flushing or spiking emotionally into very clearly defined important levels. And so I'm looking for stocks that are going to have the range and the liquidity and have, you know, their ATR is going to put them right into those levels. So let's look at, you know, KO is probably a pretty good example. So KO, I'm looking for down here off this weekly 20, anywhere between 62 and 250. On a flush, I want to see if what you mean by like less indicators, you just want me to get rid of the pivots and stuff. You know, the pivots to me are just math formulas. They're just calculations from previous important levels in the chart. So they're great. I love the pivots, but you have to also understand that like clearly defined levels mean a lot more to me, right? So you can see how the last 2 times on KO, when we flushed down to 62, the buyer soaked it right back up. So I want an emotional flush down into those levels and to see the same thing happen, right? So that to me gives me great risk reward, because if we lose 62, I could be risking what, 30, 40 cents to make $1.50, something like that, if I'm right. So it's the edge comes from the emotional move coupled with the asymmetry of the trade. Hopefully that makes sense. Not sure if you covered Tesla. I am looking to short Tesla at this level, 666. Am I looking this right? I'm not sure if you mean you're looking to short and cover at 666, or because we're trading above 666, right? The short was last week. We talked about it. It was in last week's Sunday prep, and it was pretty much this level we identified, right? So you got the big spike into that level, and you know, the only problem with shorting it on that, you would have had to swing it, right? Because it gapped down the next day and then faded. But, you know, honestly, I don't see an edge to trade Tesla here right now. If we spike back up to 780, I would be right there. If it, you know, if this thing emotionally ripped up into this 780 level, I'm there to fade it. But, you know, I can't put something trading at 700 in my Sunday prep when it needs to get to 780 for me to have a trade, right? The only other spot I see is trying to buy the emotional flush back down into the low 600s. All right, so I don't see any other questions. I'm just glancing real quick. Yeah, all right. I'm going to end it there. I know it went way over the time I wanted it to take. Again, I appreciate you guys hanging out with me on a Sunday, right? And trying to prepare yourselves for the week ahead. Hopefully you guys got some ideas from this. Hopefully you guys got some understanding of the way you can prepare for your day ahead on your own without needing me. That's always our goal, guys. I want you guys to not need us. So if you struggle with the strategy or defining your system or understanding risk management or anything like that, check out True Trader. If you guys use the coupon code YouTube in all caps, I think it saves 20% off the monthly, right? So it's like, I think it's $100 a month. You guys can get it for, I want to say 80. It's you know, that's a hell of a deal. There is the 5-day trial. It's $30. Invest in yourself, guys. Like you're watching the Sunday prep, so obviously you are making an effort to learn and grow and progress. Like, invest in yourselves, guys. I'll see you guys at the market. Stay safe.